Well, the concern about Spain's debt position is growing, and today's main effect of that was seen on commodity markets, where gold dropped more than $50 an ounce. The crude oil price fell 2.5%, copper more than 3%, silver 6.7%, and wheat about 3%. Now, here's the evidence of rising anxiety about Spain and Italy. It's their credit default swap prices. Now, this is the cost for creditors of insuring against the defaults of these countries. Spain's CDS price is almost back to the previous peaks, when bond markets were more or less panicking. Italy's is still well short of that, but it's gone up sharply in recent days. This chart shows that the latest fright comes at a time of calm, perhaps even complacency, especially on the other side of the Atlantic. The VIX index is the key measure of volatility, and it's based on the S&P 500 index on Wall Street. It's showing volatility back at its lowest levels, just when everyone thinks it's safe to get back in the water. Speaking of the S&P 500, it fell 1% last night, but there were much larger falls in Europe. In Asia, most markets were trading lower as well. The All Ordinaries closed 0.4% lower, due mainly to resources stocks and retailers copping a battering. The market dropped vertically in the morning, falling 1% in the first hour, but then it recovered later. The banks were either steady or a bit higher. And the Australian dollar is trading a bit higher tonight, despite the big slump on commodity markets last night, but the rise only came in the last few hours this afternoon. And that's finance.